Welcome to Darin Batchelder's Real Estate Investing Show. Each week, you will learn how to grow your wealth through real estate investing. Be introduced to the players that are getting it done and learn how you can get involved. And now, here's your host, Darin Batchelder.
Hello, everyone. Today we have a very special guest. We've got Monick Halm with us. Monick, appreciate you coming on the show.
Thanks for having me, Darin.
Absolutely. So just a little bit on how I know Monick. This goes back probably close to 4 years ago. It was my first multifamily networking event, and I met Monick and her husband, Peter, and they were already experienced investors, and I've just seen her blow up on social media, and she's got her own podcast. She's wrote a book. I mean, she's just doing great things. So I'm excited to have her here today. Monick, typically the first question I ask is how many properties and how many units you're invested in. I'm typically having people that are focused on multifamily, but I know that you're invested in a lot of different asset classes. So maybe share a little bit with the listeners.
Yeah. So I was making a list because I have a variety of different things that I'm doing. So I am a multifamily. So we're in about 646 units and 3 properties. And we've exited out of a few in the past year and a half, but currently that, and then we have 109 unit mobile home park, 109 spot mobile home park, 199 spot RV park.
How much?
199.
Where is that RV park?
It's in Louisiana.
Okay.
And we have a single family portfolio, 34 houses, Mississippi. And recently we've been doing a lot in industrial. So we just exited this month out of we had a 6 industrial park portfolio of 103 units. So we exited that this just a week ago. So very, very good exit. And then we still have 11 other facilities, single tenant.
Fantastic. So why get into all these different asset classes versus just staying in one lane? Why you guys are involved in a lot of different things.
That's a lot of things, yeah. As we've been going, so one of our main focus. So I started house hacking, and then I was like flipping and saying we were more on the single family side or small multifamily. And then when I first got into syndication, actually we did in 2016, actually our first syndication was a mobile home park. And we had a partner that was really into mobile home parks, and asked, he knew we were starting to syndicate, asked if we wanted to help raise money. He'd had a big investor coming from Korea who all of a sudden couldn't bring in the money. So he said, hey, would you be interested in helping me raise for this? And I was like, sure. So that was our first deal, actually. And then we had a similar opportunity with the RV park. So we
with
did
the
those.
Same partner?
Different partner.
Different partner.
Mm-hmm.
I asked you about the RV park because my wife and I recently bought an RV, and we started traveling, I think the end of April. So we started traveling around and going to different RV parks, and it's got me interested in the real estate side of the business as well. Yeah. So
this one is fascinating. It's not really a vacation RV park. It's workforce housing. So it's in Lake Charles, Louisiana. There are a lot of huge mega construction projects there, mostly in the natural gas area. But they're doing billions and billions and billions of dollars worth of projects there. And what happens is the workers that come and work on these projects, most of them come in with these RV parks, or RVs, and they'll park, they'll live there in the RVs. And so our tenants are workers at these large industrial projects nearby.
It's funny because I was at dinner last night with two guys, and one of them, his son is doing just that. His son is buying an RV because the company he's working for says, look, we're going to be moving you around so much that it doesn't really make sense for you to have a year lease apartment. Get an RV. You might be in this state for 2 or 3 months and then another state for 2 or 3 months. And so it just makes sense. And somebody's got to provide a place for them to live, right? So why not you, right?
And these are highly paid, some highly paid engineers, 6 figures, but they have these RVs. So that's our RV park.
Fantastic. So talk a little bit about you. It sounds like you've been focused on industrial lately. Like, why industrial versus multifamily? Just in the space, I've heard people talk about the two hot sectors over the last several years have been industrial and multifamily. So 2 hot spaces, but why industrial?
So we got into industrial in late 2018, but beginning of 2019 is when we purchased the six park portfolio that we just exited out of. What happened was, at the end of 2018, beginning of 2019, we had 2 multifamily properties in Albuquerque, New Mexico that we sold. And those properties were, boy, were they were bears, but they were not C. One was like C minus. It was a rough property. It's one of those, every time we just spoke to our property manager every week, and I'd call and sort of just like brace myself.
What happened?
It's like, what happened this week?
Right.
Like, like the fire or the drive-by shooting or the gun that was pulled on the property manager or this or that. It was always something.
Oh man.
The break-in on Valentine's Day, where they feel like the next morning they found that a couple had broken in, and they left rose petals and hypodermic needles.
Holy cow.
Yeah, it was crazy.
Well, they say that, when you get into syndication, you buy these larger deals, you're not having to fix toilets and write leases. But, if you're in a tougher neighborhood, you still have problems to solve that may be, some other issues. It was a
lot tougher than we'd bargained for. But we ended up, there was a 1031 exchange buyer who bought them. And so we were so happy to sell them because they were very stressful to own. But they bought it for a 4 cap. 4 cap. These really tough, arguably, you could even argue like a D+ property in Albuquerque, New Mexico. We're not talking about, B+ in Los Angeles, C- Albuquerque, 4 cap. So as a seller and for my investors, I was like, yay, great. As a buyer, I was like, wait a minute. I don't like this. I don't like competing in this type of market. I don't like being a buyer in a seller's market. I don't want to go where all the herds are going. Where else can I look? What else is out there?
So you basically were saying like, hey, look, if he's willing to buy at a 4 cap in a tough area in Albuquerque, I'm not going to spend my time trying to compete on these multifamily deals. That's what kind of led you to look at industrial? Yeah,
more or less. It's just like, I don't think I want to swim in these waters. Right? Like it's too many sharks. So what else is there? And we were approached at that point about this industrial project, and from somebody who'd had many years in industrial, and it's like, okay, tell me more about industrial. Let me learn about this. And I saw that industrial, even as retail was hurting, office was hurting, as things were going more and more online retailers are needing industrial space. They need warehouses. They need distribution centers, right? There's and there's still very much, there's a lot of manufacturing in this country. There's food processing. There's any industrial properties or any property where industry happens, and we do have industry in this country. And so there was not the feeding frenzy in industrial. It has definitely gone up, as this property that we bought in 2019 for 25, shy of 26 million, just sold for 49 million. So
nice.
It's definitely an increase in pricing and demand, but it was not as competitive. So I saw it, and I also love triple net leases. So, when we have our tenants, they pay rent, plus they pay all the property taxes, they pay all the insurance, they pay all the maintenance. So if there's an issue with the toilets, they fix the toilets. There's an issue with the roof, they fix the roof. I love it. So a lot of the surprises that happen, when you're on the residential side, that can really mess with your profitability. Those things are borne by the tenants.
Yeah. So listeners, I mean, if triple net, like she said, it's all the expenses are kind of taken care of. So, on a multifamily deal, property taxes, like in Texas, property taxes can be a big deal, when you take it over, and you're kind of trying to guess where you think the county is going to come in on property taxes, but you can end up having a big hit if all of a sudden your valuation is higher each year. And in these industrial deals, if it's a triple net lease, then whoever the tenant is responsible for the property taxes, which is huge.
It's huge. It is huge. So it's really nice. Especially with our single tenant ones, there's just so few moving parts. So,
now, here's one of the things so I met a guy that was involved with industrial, and one thing that he mentioned to me, and I want to get your take on, was that, the typically 5-year contracts or 7-year contracts, and the rent bumps are already built in. So he was saying that he thought multifamily was attractive because they're annual leases, and then if there's a lot of inflation, you can increase the lease rate, annually, where in the industrial side, it's pretty much baked in. So you can't adjust it once that lease is signed.
There's a lot more fluctuation on the multifamily side. So on the multifamily side, you can do a lot better. And I recently, with inflation, rents have increased insanely. You can't always expect that type of, those types of rent bumps that people have been seeing, in some cases over 30% in a year. But
that's crazy.
You'll generally do a lot. So for our investors, with a lot of our deals, we'll have, it's usually about 8 to 10% cash on cash, annualized returns, looking at the high teens, maybe low 20s, up to usually like 17 to 20% annualized returns. And most of our leases are 20-year leases, built-in rent increases. We know exactly what our income is. We know exactly what our expenses are, because it's debt service. That's it. So we pretty much going to hit our projections, because
sure.
Unless the variable is, what do we exit at? So we're pretty conservative on where we exit. The cap rates have been compressing. Prices are going up, so we're tending to be exiting higher than we.
The other thing I would think that you would have to look at is, if it's one tenant that's in the property, that you really have to do, significant due diligence on the quality of the business that has, because if all of a sudden that tenant, it's kind of like having a single family home, right? I mean, if you're 100% occupied and you have the same tenant for 5 years that doesn't go anywhere. Well, that's a great tenant to have. But if all of a sudden they leave, you have to find somebody to take over that property.
Right. So
if they go bankrupt, say.
Yeah, we do a type of we're mostly the types of industrial we invest in right now, or the way we do it, is something called a sale leaseback. So it's basically a company that has the property already. They own it. They want to sell it, but they still want to use it. So they usually are selling it to get equity out of that property. There are also tax benefits. There are a variety of different reasons why they might want to sell, but they sell it and then they lease it back. That's why it's called a sale leaseback. They go from being the owner to the tenant. And so it's nice that we really have very few moving parts. We don't have to touch the property. We have to do anything to it.
That's great.
Yeah, it's great. The main issue of due diligence, as you pointed out, is the company. So we have to do a lot to make sure that the company is not going anywhere and looks like it's set to stick around for 20 plus years. Most of our companies are much older. I think the youngest one we've done was a 17-year-old company. They've been around quite a few decades. They're super solid. 8 to 9, sometimes even 10-figure businesses, but usually 8 to 9 figures, that are just these solid companies. Not necessarily ones that you've heard of, but it's like a fencing company or a.
Yeah, but I mean, due diligence wise, you could look at their P&L and their balance sheet over the last several years and see that they're healthy, or they're growing, and versus not, unless obviously unless they're cooking the books, but assuming that the books are good books, you can see their growth trends and the health of the balance sheet.
And we get their quarterly, as part of the lease. We get their quarterly financials, so we see how they're doing, and if things go awry, then we have a lot of runway to deal with it. So, because that's our worst case scenario, losing that tenant. It's not as easy to replace an industrial tenant.
Exactly. Depending on the type of property it is and how it's being used and all that. So what was your background before you got into real estate?
I was a lawyer.
What kind of lawyer? Holy cow.
I was a corporate litigator. Actually, before my last job I was actually a patent litigator. So
you don't want to run into Monick, right, on the other side.
No, I was so miserable as a lawyer. You were? I was so miserable. I'll give you a little anecdote. So one Tuesday morning, I was having excruciating abdominal pain. So one Tuesday morning, I went to the ER. And when the doctor told me that my appendix had ruptured, and that I'd be in the hospital for several days. I ended up being in the hospital for 9 days. And then I'd have at least 30 days afterwards to recover, he said. My first thought when he told me this was, oh, thank God I don't have to go to work for at least 30 days.
Oh, no.
That was my second thought. Oh, no. Right?
So listeners, there's probably somebody that has a job that they don't like, look, be true to yourself and find a way to get out. There's no reason to stay in a job that's making you feel that bad.
That miserable. I mean, can you imagine preferring to be in the hospital with a life-threatening, excruciating illness than being in the office?
No. So
that's how miserable
So you were an attorney,
and
then who was it? Was it you or Peter or both at the same time that decided to get into real estate?
So I got into real estate while I was still an attorney by accident. The only thing I'd ever been taught about real estate growing up was that, I was taught, you go to school, you get the best job you can, you become a doctor, lawyer, professor, engineer, right? Of those options, I chose law. Then, at some point you buy a house, right? You buy your house that you're going to live in. You buy your car, you buy a house, you put some money in a 401k. you work till you're 65, 70, you retire, you play golf for a few years, you die. That's the secret to wealth, health, and happiness.
So fantastic.
Well, that was the story I got.
Hey, that's the way I grew up too, and I think most people are raised that way.
Yeah, that was the story, and I was like, okay, I'm dutiful. I'll do what I'm told. So that's what I did. I followed that path exactly. Law school. I was on the partnership track in a law firm. Hated my life, but but at some point I was like, okay, I guess I need to buy that house, right? That's what you do. And I live in LA, and this was back in 2005. So LA, even back then, a starter home in a semi-decent neighborhood was upwards of $600,000, $700,000. And even though I had a six-figure income, the low six-figure income, it was tough to afford that by myself. And I ended up, a friend suggested we buy a duplex. And I said, okay, since I could afford half a house, we did that. But instead of finding like one house with two equal sides, we ended up finding this old Craftsman that had a bigger downstairs and a 2-bedroom upstairs and this converted garage in the back. So we each took a bedroom in the bigger unit and then rented out the upstairs and rented out our back house. And then I was house hacking before I knew that was a thing. And I was just like, wow, this is awesome. These people are paying my mortgage. This is great. And then when I met Peter, he had a duplex and we got a single family rental together. I had the great fortune of, we got married in 2007. And last week we celebrated 15 years.
Congratulations.
Thank you. And I got pregnant, and a week after I told my boss that I was pregnant, he called me into his office. I thought I was going to get a bonus because I've been working so hard, so many days past midnight. And instead, I got fired.
No way. Are you kidding me?
No, I'm not kidding. So,
how can he do that?
Yeah, I don't think it was right. But anyway, you know what? It was
the best thing, right?
The best thing he ever did for me. Because I was so pregnant, I thought, I don't know if I'm going to be hired right now and then I'm going to take a maternity leave. I'll wait until after I give birth, take a short maternity period, then I'll look for another job. And my daughter was born in late August of 2008. Within a month after she was born, the markets crashed, the economy went, they went into free fall. Terrible time to find another job, and which was a blessing because I really, really hated law, and I had to find something else. We ended up selling one of our duplexes. We started flipping houses, and we got the real estate saved us financially, and then I got into that.
Good for you. You're not the first story I've heard where it's been like accidental real estate, so I've heard people say that they were in a single family house and then all of a sudden they got relocated and they, it wasn't a good time to sell. So they rented it. And then all of a sudden they saw the cash flow and they were like, oh, wow, I'm just going to hold on to this. I'm going to start doing this more often. And, that's where, for listeners' benefit, look, everybody starts with one investment, right? Everybody starts with none. And you can start with a single family home, a duplex, or you can go right into large scale multifamily syndication or any of these other asset classes that we were talking about earlier. But it's a way to grow your wealth, while you're not having to work it every day. And until you see it, until you see the cash flow coming in, it's really hard to understand, people that are in real estate are like, wow, this is the best thing ever. And then people that are still in that life that you were talking about, get a good job, climb the corporate ladder, put a little bit of money in the 401k. They can't understand it. Right. So
Yeah.
what's your advice to people that are in that world and you're trying to explain, like, look, you're missing out?
Yeah.
How do you explain it to people?
Well, you know what? I recently did a TEDx talk, and in my talk, I was talking about how do you create crisis-proof finances? Because at that time when I got fired and then 2008 happened, we were in a serious crisis. And I'd done everything. We even have had some real estate, and I had some investments, we had savings. The average American, I think, has less than $1,000 of savings.
Less than $1,000?
Yeah, I think there's like 61% or something,
Wow.
less than $1,000. And 40% have less than $400. And it, you can find yourself, and most of us are only taught, even when you have a good job, right? You've gone to school and you have a good job. We're only taught to trade our time for money. And if it's fine, you're like, oh, I have a great job, I'm making 6 figures, whatever, I'm fine. But if you can't work for whatever reason, you get sick, you get fired, you lose that stream of income. Without you, I think of financial stability like a table. And most of us are taught, and in our streams of income are the legs of that table. Most of us are taught to have one leg on our table. So something happens and there goes your leg and it comes crashing down. So to have financial stability, you want multiple legs on your table. So you can lose a leg and you still have plenty of legs holding you up. And you want to have legs that most of the legs are not dependent on your time. So if you can't work for whatever reason, or you don't choose to work, or you can't work, then your table stays steady and your table stays firm. So you're gone, but your legs and the real estate is still working for you.
That's great.
Holding you up.
I've never heard that, that discussion before, and it put that way, but it makes so much sense. And like, I used to be in that world where like one financial stream, was it. And I think that most people are sold the fact that that's the secure way to do it, right? It's security. But just like what happened to you, you were pregnant and all of a sudden you get called in the office and you get let go and you don't get anything on the way out, right? You get zero. Sometimes
I got 2 weeks.
How much? 2 weeks?
You gave me 2 weeks.
2 weeks. If it's there's certain people that, it's a downsizing of a company and maybe they get a year of severance, or something, but then it's over and just you're on your own and you have to figure it out. And so, over time, building multiple streams of income is just a smart way to go about it. And I wish I was taught that at a much earlier age.
Me too. Because it was really horrible. And, as we enter into another recession, it's so important for me to let people know. It's like, build up, have your money working for you so you don't have to work for your money. That is what will create true financial stability for people and freedom. Right? You have enough of those passive streams of income that it exceeds your expenses. You can maintain your lifestyle. Then you work because you want to, not because you have to. And
absolutely.
That's where
and it's one step after another. I mean, like, you don't have to, there's some people that they sold their company and they have a ton of money that they can get into, these deals and put in a lot of money, and that's kind of the value they bring. But there's other people that are like on the fringes that are saying, well, I don't have a ton of money. I'd like to do this, but I don't know how. But you gave a perfect example. It was like, you and somebody else went and got a house. It wasn't a traditional duplex, but it was basically, where you guys lived in one part of the house and you rented out the other. There was a great little book. If you are a beginner, haven't invested in real estate and you don't really understand all the concepts, Jake and Gino wrote a good book. I can't remember it's something about bees. But I read it, and it's an easy read. And, one person just rented out a room in their house, and then all of a sudden they started seeing the value of that cash flow. And then they went on to another property and another property. So it can be done for sure. Hey, I'm going to change the subject a little bit. Like, how'd you grow up? And
before you do, I just want to offer on my website, reigoddesses.com. I have a free guide, investing in real estate from $1 to $1 million. Investing strategies for every budget and every goddess. So you can go on, grab that for free. And I share.
Can you spell that website?
REI for real estate investor, goddesses.com.
GODDESSES.
And on that, so you'll see that available there. So for anybody who's thinking, so I shared different strategies, 12 different strategies. So if you're thinking, I don't know if I have enough money, so I share 4 strategies that are little to no money down. And then if you're thinking, maybe I have some money, but I don't have time. It's like, who has time to go to all these open houses or to have it's just, I don't have time. I'm too busy. Like, okay, well, I share 4 strategies that are minimal time. And then if you're thinking, but I don't want to be a landlord. I don't know if I want to get a call in 3 a.m. or about toilets or deal with, tenants and termites and ever have to evict somebody. Then I share 4 strategies that where you don't have to deal with tenants. It's because there are a lot of real estate investing is not one size fits all. So there's a way to do it that will suit your budget, your temperament, your desires. But it's important to just get in and get your money working for you. Start building those legs under your table.
Just get in. I love that. I always am talking about you got to take action at some point. I mean, you could listen to podcasts, read books, but you have to buy something at some point. And listen, just get in. I love that. And check out her website because those are real strategies. And one thing I love about the real estate world is there really is no ceiling. It's kind of like whatever you can think in your head, and it changes over time. Like you start out with one property and then all of a sudden you start thinking, okay, well, what do I want to do next? And maybe it's get into a different asset class. Maybe it's just to do a larger property. But look, I mean, there are shopping centers, there are office buildings, there's skyscrapers, there's resorts, there's all different types of asset classes that are real estate related that you can get involved in. But the first step, you actually got to buy something. Mm-hmm. So some learning lessons. Any learning lessons that you can share with the listeners?
Yeah, I think you were going to ask me about growing up or.
Oh, I was going to ask you how you grew up. And did you know that you would be successful when you were a child?
Did I know that I would be successful? I have really great supportive parents. I'm a first generation American. My parents are from Haiti. They've always said, Monique, you can be anything you want to be, right? In parentheses, though, that was as long as you're a doctor, lawyer, professor, engineer, right? Because that was what success was. Right. So I thought I would be one of those things, right? So I never doubted that, okay, the path is for me to go to school and then to graduate school and then get one of those, go on one of those 4 paths.
The transition from being a lawyer to real estate, how did your parents take that? Now I'm sure they're like, you've shared financially where you were at and they're like, oh, great move. But in the beginning, were they like, really?
They were, well, I did not quit to do what I do. I was fired. So I fell into it, and they were always supportive of what I was doing. So it was never like, oh no, you shouldn't be doing that. It seemed like the next step and the next step. And I had an older brother too that had been doing real estate. He'd been talking to me about it for years. I just could not hear him.
Could not hear
times,
him.
he would tell me about syndications. He was telling me about this, and when he was speaking, it was like wah 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 wah. Like I just could not hear him talk.
Isn't it crazy? Yeah. And now you are on the other end, and I'm sure that you can see people in your mind that when you talk to them, whether it be friends, family, colleague, whatever, that you could see that they're seeing your lips move, but they're not going to take action. They haven't drank from the Kool-Aid. They don't see the value in it. They're fearful, whatever the case may be. They're not ready for it yet.
It creates it requires a paradigm shift. And
talk about that paradigm shift.
So one of the first paradigm shifts is to shift from thinking that money is something that you get when you trade your time for it. All right. So the cash flow quadrant. I was at an event on a cruise. Robert Kiyosaki was speaking, and he was talking about the different mindset levels in each of those, right? So there's an employee mindset, and then there's a self-employed mindset. There's a business owner mindset, and then there's investor mindset. And so at the employee mindset level, right? And you can be a super successful, super well-paid employee.
Sure.
I'm not saying it's necessarily a bad thing, but
and there's people that love what they do. I mean, so be it. Like that's good. That's good.
Yeah.
Right.
I mean, I think do what you want to do, but get your money working for you as well, right?
Right.
Like
exactly.
Also have, your money working for you, so you have all those legs at the table. But, if that's all you're thinking, like I just trade my time for money and my goal is to get the better and better job. They're not thinking about tax benefits normally, right? It's just like I work, I get, so that's that mindset. It's a certain one. Then people go, oh, you know what? I want to own my, I want to be in charge of my own thing. And they're going to be self-employed, right? I'm going to create my own little thing. But when you're self-employed, you're still trading your time for money. You're just, now you own the job as opposed to somebody else owning the job. And but your clients, you're working for that client. Actually, when I heard that Robert Kiyosaki speak, I realized I had that self-employed mindset. I wasn't really fully in the business mindset yet. I was still working way too much in my business. I didn't have a business that was more working for me. So then you get to the business mindset, then you have employees, you have systems, you have things that will work largely without you. And so you can be away from it, it'll work without you. And then investments as well. So as an investor, again, it's a different shift because on the right side of the quadrant, it's trading your time for money. On the left side, it's you're creating things or investing in things that are working for you and giving you money without you having to put your time in or put minimal time in.
And for the listeners' benefit, the left side of the quadrant, as you mentioned, both the employee and the self-employed, that's where you're taxed the most, right? And then on the right side, the business quadrant and the investor quadrant is where you're taxed the least. And so, when you're taxed the least, that's where you get to save the most. Not save, but you're able to take home the most net of taxes.
Yeah, it's not just what you make that matters when we're talking about wealth building. It's what you get to keep.
Yes.
And so that was the other paradigm shift that I received. I always thought that the more you make, the more you pay in taxes. Right? We have a progressive tax system. That was what we're taught, right? You make more money, you pay more taxes. I didn't realize that owning businesses or real estate doesn't work that way.
Right.
And especially with the real estate, you're often making money, but losing on paper for taxes. You're paying less in taxes. I was like, oh, Really? So when I first found that out, I had a friend of mine who had been a super successful businessman. He had three multi-million dollar businesses, found himself owing $500,000 to the IRS one year. And then he found out about the tax benefits of real estate investing. So he bought an apartment building. He bought an apartment building in Memphis, Tennessee. He was making six figures a year. But because of the way the tax code is structured, that purchase brought his taxes from $500,000 to zero.
Wow, that's a huge,
huge
difference.
Yeah.
And then you think about how that compounds over time. That $500,000 is now in an investment that's making him money versus just being sent to the government.
Yeah.
And but then there's certain people that are outside of the real estate world, and they're like, that's not fair, right? Like, why is that the case? Well, the government puts together incentives to try to generate help grow the economy. And so look, he bought that apartment building, but he had to hire a property management company. There's jobs associated with that. He may have done a rehab on the property, and so he hired a rehab company to come in. He made the property nicer, by putting capital into it. So there's a lot of economic drivers from that.
Yeah. Also, I found out there's a book called The Color of Money, but they were talking about why they first started giving incentives for owning real estate, either having your own or as like where you live in or as a investment property. It started in the 1940s after World War II, and they started to give tax incentives for owning real estate because they thought it would help counteract communism. They thought if people owned property, then they wouldn't want to be communists. So that's when that began.
Is that right? Both residential and commercial started that way.
Mm-hmm. Yeah, they wanted to get people owning property so they wouldn't become communists.
Very interesting.
There are a variety of different reasons why the government decides to incentivize things, but fair or not, that's how it is. So that is the game. Those are the rules of the game, and you can benefit from them just like anybody else. Just play the game so that it works for you.
Exactly. Like, I don't know. I guess I don't know what the right words are, naive or just I fell into being like most people that, taxes I'm just not going to spend my time to really understand it, and then when you start to realize the financial impact when you understand it, it can be, absolutely life-changing. And so, that's another thing that, to tell people is, look, the tax benefits of getting involved in real estate is huge, and you shouldn't neglect to educate yourself about that.
Yeah, because it's not just what you make, it's what you get to keep, and you get to keep so much more. And a very savvy CPA, so often for business owners, once you start making a lot of money, a savvy CPA will say, you know what, you should look into buying some real estate. You'll pay less taxes. And people don't, but how are you going to know until you know? But
right.
It's good to educate yourself.
Well, let me go someplace. You're an inspiration. You're an inspiration to investors in general. You're an inspiration to women, to become investors. You actually have a podcast called Real Estate Investor Goddesses. So talk about, what role that kind of plays for you in, trying to get the word out and help other women to, build their own empire.
Yeah. And I went to my first syndication seminar in January 2016, and a lot of it was so over my head. I didn't know so many of the terms they were talking about, but I just knew I love this. I don't understand this totally yet, but I will, and I love it, and I want to do this. It's amazing. And as I was I remember the Friday and Saturday night, they kind of had like a little networking party. So we stayed over in the hotel that night. And Sunday morning, I'm at the hotel gym, I'm at the elliptical, and I'm just like processing the weekend. And they were talking about, you know, who do you want to work with? Build your brand, build your network. And between being a lawyer and doing what I do now, I actually became a coach, and I became an abundance coach for women. So I was working with women around money. And I was thinking about how amazing real estate is, especially for women, you know, because we have a lot of economic challenges. So we tend to get paid less for the same amount of work, which doesn't, that income gap doesn't show up in real estate when it's like people pay market rent, right? So that, you know, whether you're a man or a woman as a landlord, right, they're paying the market. There's a mommy tax. If moms have to go away to have their kids and they lose years of seniority and you know, career building time, all of that can be erased with real estate. And with it's flexible, it gives us time to be the women, moms, whatever we want to be. And I was like thinking about how great it was, and then I was thinking about that room. It was a conference. There were about 120 people there, and maybe 8 were women.
Wow.
Out of 120. And ended up joining this high-end like, real estate mastermind, and there was me and 19 men.
Wow.
And, you know.
Good for you.
Yeah, except no. It's like I shouldn't be the only woman in that room, right?
No, you shouldn't. But like, you know what? You had to be brave and courageous to do it.
Yeah,
right?
I never let it get in my way, and in fact, I think it helped me in certain ways. But as I was on that elliptical, it came as this divine download: bring women into this room. Bring women into this room. And this mission, I was given this, like, here's your mission, should you choose to accept it. But it's to help 1 million women create financial freedom through real estate investing. And that mission and Real Estate Investor Goddesses was born at that point. Not the how. I still don't fully know the how, but it's like, here's the next step and the next step. And I you know, I was basically like, you know, I just got this full body yes about it, and it felt right. And, you know, more or less I said to God, like, okay, I'll do this, but you just have to guide me. He's like, oh, just tell me the next thing to do and the next thing to do. And so little by little, that's what's been created.
That's awesome.
Yeah.
Look, not everybody listens to that whisper, right? You know, God gives you a little whisper, you know, go do this. And some people, why me? Right? Like, you know, or I can't do it, or, you know, pick somebody else. And you actually took it and you're running with it, which is fantastic. And look, I've talked to women, and they've told me that, you know, over the last 5 years that they've definitely seen more and more women get involved, which is a fantastic thing. Yes. The numbers still are not 50-50. You know, there's still a lot of room, you know, for that to grow. But I think I heard somebody on a podcast recently say, a woman say that maybe 5 years ago it was like 6%, and now it's maybe 20 or 30%. And so, which is a huge increase, but you know, there's still a lot of room to grow.
Still more work to be done.
A lot of work to be done. And, you know, so if you look at, you know, we were talking about tax benefits. If you look at a couple, right, there's what's called a, you know, full-time real estate professional. And I've seen a couple instances where, you know, the man is, you know, maybe a big corporate exec. He wants to stay there, right? And he makes a big W-2. And then the wife got involved in real estate, and then all of a sudden, all this depreciation all helped cover all of the income from her husband. And now their tax situation is, you know, where they're paying no taxes. and they're able to take that money and reinvest it. And, you know, had she not gotten involved, they would have been, you know, I'm sure they still would have been doing just fine. I mean, high paying corporate exec, but, you know, that's a huge impact on their family, you know, on their wealth building opportunities. And, you know, sometimes I think that, you know, especially if you were a stay-at-home mom, you know, which is an incredible job, it may be difficult for women to think like, well, how can I add value financially, right? And here's an opportunity to do it and still have the flexibility of your time.
Yeah, absolutely.
So
I think it's perfect. It's perfect for, I think everybody should be investing in real estate. I'm a little biased, but especially women.
Well, I mean, you've seen the benefit. That's the thing is like, look, if you went and, you know, found the cure for cancer and you had cancer and you took it and it worked, you're going to tell people about it, right?
Yeah.
And you bought this property. You were just talking about one property. You bought an industrial property at $25 million and then sold it for $49 million. Like, that's crazy, right? And you had investors, and so, you know, look, but you guys made a lot of great money in that. Your investors made great money in that. But I've asked people, like, how do you, you know, older, wealthier people, have you seen people that have just saved their way to wealth? And very, very few.
Not without growing it.
Right. So,
Yeah.
right. So it's like real estate, you know, building a business, you know, and selling that business at some point, you know, that after you've grown it, it could be because it has value. Where if you're an employee, the minute you walk out, you don't get paid anymore, you know, outside your severance. If you build a company, you know, and you're growing that company, there's value to sell at the end. You own something. Real estate, you own something. I mentioned my kids were complaining about gas prices, right? And I'm like, yeah, I don't like paying these gas prices either, but I'm glad I own ExxonMobil. Like, so my stock price goes up and I pay more at the pump. But where people get hurt is if you don't own assets, you know, that especially, you know, I'm biased now too, I've only been in the real estate world for 4 years, but cash flowing assets, that is amazing. So where do you think we go from here? Are we at a top?
Oh, top of what? The market?
Real estate market. You know, I'm asking you for like your outlook. Are you still bullish on buying?
I think there's not one market. It's not like the Dow Jones, right? There are different asset classes. They're different, and in different areas and different neighborhoods.
So right? What are you bullish on?
Not everything.
What markets? What asset classes are you still bullish on?
I still really love my industrial right now. I'm still like doubling down on those, and I'm very excited. And I think that as interest rates rise and prices fall, it's still, I mean, even with at interest rates, I think it's around 6% right now. It's still historically low. That's not, it's still quite low. And I mean, I think was in the 80s, it was 18% interest rates.
Right. It's just risen so fast that I think it's been a shock to a lot of people.
It is shocking, and inflation is rising, the highest rate in 40 years. So, but if you've got the cash right now, it's going to be a really great time to start buying. And as things, but the important thing is if you can cash flow, you can buy in and you wait. So don't wait to buy real estate. Buy real estate and wait. And I know that there are always people. Gosh, I remember in 2016, I was there's a guy that had 10,000 plus units, and he'd written a book. It was by, I won't share his name, but a big guy in the field. He's like 2016. He's like, we're at the top of the market. I'm not buying. I've stopped buying multifamily. It's like, really interesting. So he stopped buying in 2016.
Right.
And then I saw him again in 2019. It's like, hey, so how's that going?
How's that going for you?
Yeah, it was like, actually, they were buying self-storage at the time. It's like, what do you, he's like, self-storage, it's hard to move the needle as much. And so he was selling some of his worst performing multifamily, and he was starting to buy again. But I mean, 2016 to 20, that was a lot of growth in that.
Yeah, I've talked to people that have said, like, I have people that say, I'm waiting for a correction, and then when the correction happens, they're too afraid to pull the trigger. And those same people, like, don't ever buy.
Yeah, people have been waiting for correction for so long. I mean, that was 2016.
Right.
And like it's 6 years later, and there's been incredible growth. Can you imagine sitting out on all of that?
So my viewpoint is that I'm
if
still,
the numbers make sense, buy it.
I'm still a buyer, but I am cautious in this market, and I would probably advise people, don't go all in, right now, but I wouldn't stop buying. I mean, I don't know what's going to happen, but look, I mean, if inflation continues and I own assets, then that should rise in value. If we have a big correction, rents could come under pressure and valuations could come under pressure. But we don't know what's going to happen. So I'm going to continue to look to buy. And, but I would
if the numbers make sense.
If the numbers make sense.
They have to make sense. But what's nice about if you're owning real estate right now, the rents are rising. So inflation is going to make the rents rise, going to make your asset values rise. And when you have fixed income debt, it makes your debt actually cheaper relatively. So the debt that you're paying every month, it's worth less and less. So your debt gets cheaper relatively, but the rents increase and the property values increase. So when you own property in this type of market, it's a good thing.
Absolutely. So what's the next big stretch goal for you? You brought up a huge goal of helping 1 million women create financial freedom through real estate investing. I mean, that's a massive goal. So I typically ask, what's your next stretch goal? But like that is
I'm still in it.
That's right. That goal itself is a lifetime, right?
Yeah.
That's huge. Hey, what do you like to do outside of work for fun?
So much. I love to travel. So
Where?
Traveling. So in my last big trip in January, I went to Peru, went to Machu Picchu.
Oh, nice.
And we have some domestic travel, and then going to Jamaica and Cancun. We have our
I was going to mention that, like, you have a conference coming up in Cancun, right?
Yes, in January. So this is for couples.
So what is that all about?
It is, it's for couples that want to learn. It's sort of like it's a real estate investing seminar and a couples retreat. So it's how do you do this process in a way that increases your income and your intimacy? How we get on the same page and the values wise? How do we learn? How do you speak to each other? Really talk each other's language so you can make really powerful decisions together and just soar. So that's what
awesome.
That's about.
When is that?
Excited,
and how do people learn about it?
Yeah, it's January 19th to 22nd, 2023 in Cancun, Mexico. And if you go to reisoulmates.com, you can find out all about it. So reisoulmates.com.
Awesome. So you must have a heart for couples and marriages, and so you help and grow wealth, but you're also focused on the relationship.
Yeah. Well, my husband's my business partner, and my focus has been on helping women, but a lot of women that said, but my husband at home, he wants to learn this too. He wants to be part of this, or he's not sure how he wants to be part of it, and I want him to be part of it. How do I do that? And that's how Real Estate Investor Soulmates was born, from all these women saying, yeah, but how do I bring my significant other into this?
That's awesome. And look, I mean, for listeners' benefit, whether you're getting in real estate or you start your own company or whatever, that's how a lot of needs get met, is that you start going down a path and then all of a sudden you hear people asking for something. So Monick, had all these followers and all these women that wanted to involve their husbands. So she went and created a way for them to do that. And that's huge. You're solving a problem for people.
Yeah.
So thank you for doing that. Thank you for coming on the show. You are always just a fresh ray of sunlight, and I miss seeing you. Like, we don't cross paths that much anymore, but I see you on social media, and you're doing fantastic things. So I appreciate you sharing with us today. Listeners, I hope that you enjoyed that one. Until next week, signing off.
Thank you for watching Darin Batchelder's Real Estate Investing Show. If you liked the episode, please click the like button and subscribe to the show. If you already are subscribed, then thank you, and please share the show with a friend. Check out other free resources at darinbatchelder.com/learn.